This piece lays out the bull case for Bitmine Immersion Technologies, focusing on its massive Ethereum holdings and a valuation gap that suggests a big upside. Let's get right into how we can sharpen this analysis.
Okay, so diving right in. I think the report needs to more explicitly tackle the dissonance between BMNR's huge asset portfolio and its tiny loss-making operating revenue.
Exactly. Right now, that $5 million TTM revenue and the $6 million net loss, they're listed almost like, footnotes.
Right, and the weakness there is that those numbers aren't really integrated into the core thesis. The whole argument is about the asset valuation gap, so it almost feels like you're ignoring this other part of the company.
That's a really good way to put it. So the suggestion then is to really articulate a clear hypothesis for the future of that legacy business.
Yeah, you have to frame it. Reinforce the idea that this is basically an undervalued treasury stock, not some struggling tech company.
And you can do that with concrete numbers. For instance, just quantify that operating cost, the net loss, as a percentage of their liquid assets. Show how, truly negligible it is.
Or even discuss a potential spinoff. Highlight how that debt-to-equity ratio is still easily manageable even with the operational losses. You just have to address it head-on.
Okay, so setting the legacy business aside for a second, let's talk about the management. While the institutional credibility is rightly highlighted, the report feels a bit thin on their actual plans.
I mean, it's great that you mentioned CEO Chitsong and Tom Lee. That absolutely boosts confidence, but the weakness is relying on those names alone.
It's the who, but not the how.
Exactly. The bull case is completely silent on how they're actually going to close that valuation gap.
So the suggestion is to strengthen the argument by really digging into the concrete strategies they might deploy. It's not enough to just list their resumes.
Right. We need specific actions. You could, for example, investigate management's past comments on things like yield generation or staking, or how they might leverage holding almost 3% of all ETH.
Yeah, or look into plans for using their cash for buybacks. That would be a direct way to narrow that market cap discount.
And that leads, I think, to the final point, which is about timing. The technical analysis needs to be woven into the fundamental argument.
I completely agree. Right now, the technical data, the RSI, the support and resistance levels, it all feels a bit separate, like an appendix.
It's just tacked on at the end. The weakness is that it doesn't provide a cohesive timeline for a potential move toward that, massive price target.
We need to connect the charts to the story.
So the suggestion is to use those technical indicators to define an immediate catalyst window. You align the oversold condition with the new management and the new strong buy coverage.
Yes, connect the dots for the reader. Frame that break above, say, $34 to $36 as the confirmation signal from the market.
Right. The thing that validates the new strategy and starts the process of filling that valuation gap.
And you should also discuss how that technical floor around $29 gives investors a clearly defined risk level if they want to play for that 162% upside.
Absolutely. It makes the entire thesis more actionable.
So to wrap up, we've highlighted 3 key areas. First, integrating the legacy financials into the narrative. Second, strengthening the analysis of the new management's actual strategy.
And third, weaving those technical entry and resistance points into the core catalyst timeline.
Implement these suggestions, refine your analysis, and we really encourage you to submit your updated work back to us. We'd love to see it.